Today's big headline from Wall Street: Carvana is officially joining the S&P 500. In a sweeping quarterly rebalance announced by S&P Dow Jones Indices, Carvana will enter America's most watched benchmark index on December 22, 2025, alongside CRH plc and Comfort Systems USA. The reaction was immediate. Carvana shares spiked roughly 9 to 10% in after-hours trading once the news broke, rallying near the $400 mark, a sharp rebound from its former lows. CRH and Comfort Systems also rallied, illustrating how inclusion in the S&P 500 often triggers a surge in demand. Why does this matter? Getting added to the S&P 500 isn't just a badge of honor, it's a structural shift. Index tracking funds and passive investors tend to buy shares of the new entrants, boosting liquidity and broadening the investor base. It also signals that Carvana now meets the strict eligibility thresholds of market capitalization, trading volume, float requirements, and, crucially, profitability. For Carvana, the timing couldn't be more symbolic. Once stigmatized as an over-leveraged meme-era name, the company has undergone a dramatic turnaround in 2024-2025. Its renewed growth, stabilization of operations, and improved investor sentiment seem to have convinced the S&P committee it belongs among the Elite 500. That said, a word of caution. Historically, when companies join major indices, the initial pop often reflects forced buying by index funds. Once that buying pressure subsides, those stocks can level off or even retreat. So while today's jump is real, whether Carvana's long-term rally holds will depend on sustained fundamentals, continued profitability, and broader market sentiment.